It's possible that XRP's price wasn't meant to be set by the free market, but by necessity. But what if we're not waiting for price finding at all? What if we're waiting for price revelation? People who have been looking at charts and candles for years are shocked by a set price that is so high it blows their hair back. A price that was agreed upon instead of guessed. An amount set by powerful groups behind closed doors, as the price had to be that high for the system to work. This thought is simple, but very different. People aren't treating XRP like a risky product. It is being marketed as infrastructure. And infrastructure doesn't work unless it's used by a lot of people. Scale needs cash flow. A high value is needed for liquidity, not for attention, but for use. The people involved are not regular sellers. The IMF is being talked about. There are depository trusts that work with the Bank of New York Mellon, NASDAQ, SWIFT, Wall Street, central banks, and the world's biggest banks, and levels of money stuff that most people have never heard of. Behind the scenes, processes move trillions of dollars every day. This is where the idea gets more interesting. This point of view says that these organizations agreed there was a problem years ago, some say 5 or more. The current method for global transfers is slow, broken up, expensive, and out of date. If a new bridge asset was going to be at the center of transfers of value around the world, it couldn't be cheap, always unpredictable, or widely owned by many people. What are you going to do? You stop people from finding prices. You make people unsure. You let governmental problems scare people away from shopping. You let cases drag on just long enough to stop a lot of people from adopting and collecting. While people argue about whether XRP is dead or not, infrastructure is being built in the background. In this light, the SEC action wasn't random or a sign of incompetence. It was just for show, as a way to delay things. It is said that an initial working price of around $5,000 per XRP was talked about as a practical need and not a fantasy goal. In the long run, maybe $10,000 or $12,000 as the traffic grows. Not because the number goes up, but because world settlement calls for it. Use your brain to think about this. The goal of XRP is to move value quickly. It's important to think about price if you want it to be a bridge for international payments, derivative settlement, state transfers, and institutional balance sheets. A low-priced object needs to be traded in huge amounts to move a lot of value. That leads to slippage, conflict, and risk. When the price of XRP goes up, fewer tokens are needed to send huge amounts of money. That's being efficient. That's being stable. That's designed for infrastructure. This is why Ripple's CTO, David Schwartz, has said that a more expensive XRP is a better way to pay. Just that sentence breaks down the idea that Ripple wants XRP to be cheap. They don't. Cheap doesn't work when you need a lot of it. That's not possible with an object that has a value of 1.2 quadrillion. Something that acts like a penny stock can't be used to settle big debts. It doesn't work at all. Dr. Jing Wis has said this many times, saying that the price of XRP is already set. Strong financial institutions have agreed on it to a level that lets it work as a global payment standard. Not given up to. Prepare. The pieces start to line up when you zoom out. Along with Ripple's relationships, central banks are testing digital currencies and opening up cross-border corridors. Regulations are also becoming clearer after years of being hidden. The time isn't a mistake. The way people talk about XRP has also changed. Recently passed laws like the Clarity Act are changing what digital assets are and how they are used. XRP is being treated less and less like an investment and more like a commodity, more like gold than a startup token. Because you sell gold on Robinhood, it doesn't have any value. It's useful because it solves the debts of different countries. That's the group that XRP is going into. This is why the old way of guessing prices starts to fall apart. When assets are set up as global infrastructure, Fibonacci levels, moving averages, and RSI indicators don't work. Highway prices are not set by chart patterns. They are priced based on how useful, output, and necessary they are. The market doesn't decide what will happen with XRP. It is a system. Regular investors are used to thinking that news cycles, memes, and bull runs lead to gains. But investments in infrastructure move in different ways. They stay quiet while the system is being built, hidden while it is being put together, and only shown when it is ready. In this view, this is why public ownership is so important. For XRP to be at the center of global payment, it can't be sold to a lot of people for a low price. You need to concentrate. There needs to be control. There needs to be stability. The enemy of peace is change. You let time go by. People are bored because you let them. They can sell. They were free to make fun of the idea. After the switch is turned on and the rails are finished, price doesn't run. It changes prices, not over time, building-wise. This is why the daily chart isn't being watched by people who know what's going on. They are keeping an eye on the law, adding banking features, corridors of liquidity, language of the central bank. It's quiet because no one is paying attention to them. Because the question won't be, why did it go up, when XRP finally does its job as infrastructure and not as a trade? Why did it get this low in the first place? XRP was accepted as collateral on a derivatives market that is regulated by the federal government. Just that one fact changes everything. Collateral is what banks put up to protect their accounts. That's what balance sheets show. As the world's biggest financial markets use it, you can borrow money, control risk, and settle trades. There is no need to guess here. This is about how things work. When XRP is used as collateral in the derivatives market, huge amounts of it are almost certainly going to be locked up in institutional control. You can't just move the collateral around. It doesn't change hands every day. It just sits. It's still there. It is no longer in usage. That creates a supply dynamic right away that small buyers don't usually think about, not often think. That's a lot of options on the market. The world's biggest stock market is there. The worth of this idea is thought to be anywhere from hundreds of trillions to well over $1 quadrillion. In that situation, an object must meet strict requirements for being liquid, reliable, clear in terms of regulations, and legal certainty in order to be accepted as collateral. It's not a coincidence that XRP got over that obstacle. Now connect this to the case against the SEC. The case did not happen by itself. It worked as a device for keeping time. It made sure that banks had time to buy XRP on the open market without drawing attention to themselves while regular people couldn't get it. On the big platforms, trading stopped. It became hard for people to get money. Fear took over. The first exchange to really take XRP off its list was Coinbase, which is one of the biggest in the world. Then came other sites. It became suddenly hard or impossible for small buyers to buy. At the same time, organizations with long-term mandates, access, and legal teams were not following the same rules. They didn't feel scared. They were getting bigger. If you remember, banks were buying up a lot of XRP just a few days before the SEC case was made public. That time is important. It tells you when and what people knew. It wasn't a mess. It was group work. The case made things uncertain for most people, but certain for those who were involved. And in financial markets, doubt is the most powerful way to get what you want. It makes people with weak hands sell. It moves assets from people who are eager to people who are patient. The build-up phase always works this way. Now that XRP can be used as collateral on a regulated derivatives market, it's even more clear what this means. A lot of XRP is probably locked up and out of circulation in the hands of institutions. It's likely sitting on balance sheets as collateral for huge financial positions. There will be less XRP on the open market because of this. When demand goes up and supply goes down, price can only go in one way, up. This is what a supply shock looks like, not because of shopping hype, but because it's what the institutions need. Assets used as collateral don't act like assets used for trade. They are important for strategy. They are held to keep them steady, not to flip them. When an asset changes into that job, the way it is valued changes completely. Pay close attention to what comes next. In public places, people talked about whether organizations like the IMF could ever hold crypto assets in the future. When directly asked, the answer was careful. Be very careful. Words used in court, using a conservative frame. But this was the most important part. Under the current rules, a government would have to use a crypto asset as its currency in order for the IMF to hold it. Just think about what that statement means. When a country uses a digital object as money, that asset is locked. The item is taken off the open market. It can't be easily passed between retail participants anymore. It turns into independent infrastructure. When that happens, the supply doesn't just go down, it falls apart. At the same time, acceptance by institutions speeds up. This causes a huge imbalance. Demand is growing while quantity is shrinking. In those situations, markets can't stay the same. To make up for it, the price has to go up. There's no other choice. So, the claim that the price of XRP can't go that high is completely off base. The price is not based on how excited the market is. It's about the rules of math. Low valuations are not possible for a bridge asset that is used for global settlement, collateralization, and deals at the sovereign level. In this chain of events, the SEC case had a very clear goal. The building wasn't ready yet. The rails were not ready. The rules and regulations were not in place. That's why time was needed. The use of crypto went down during that time. Speculation died down. Participation in retail fell. There wasn't much accumulation. In the background, clear rules were being quietly put in place at the same time. Clarity had to be established first before size could be added. That explains a very important thing. After the SEC lawsuit, XRP was the only digital currency in the US that had clear rules about how it could be used. Not partly controlled, not described in a vague way, fully dealt with. There's no chance in that. It made XRP perfect for use by institutions at a time when they were getting ready to step in on a large scale. Because of this, Ripple execs have always talked about XRP not as a speculative token, but as a digital asset meant to fix problems with correspondent banking. To put it simply, here's how that works. These days, banks use pre-funded accounts when they do business abroad. In order to make moves possible, banks in one country have to keep money in the currency of another country. This method is expensive, takes a long time, and wastes money. XRP changes that. XRP doesn't pre-fund accounts, it's more like a bridge. A bank sends money in its own currency, changes it to XRP, sends it right away, and then changes it back to the other currency. No cash sitting around. Don't wait. Not a scratch. This is not just an idea. This is working fine. Once more, price is important. If XRP is cheap, it takes a lot of it to move a lot of money. That makes things risky. If XRP is expensive, smaller amounts can settle at a huge value with little change. That's why the price going up isn't a bug. That's what it is. This is also the main reason why XRP is being compared to Bitcoin more and more. But there is one important difference. Bitcoin is mostly used as a way to keep value and is seen as digital gold. People see XRP as a payment layer and digital infrastructure. It's not like speculation assets are priced like infrastructure assets are. Their prices depend on how much they do, how reliable they are, and how important they are to the business as a whole. When you realize that, the whole story changes. The suit from the SEC wasn't an attack. There was a wait. The delistings were not a mess. They were keeping things in. There was no failure in the silencing. It was getting ready. The last part starts now that XRP can be used as collateral, is built into regulated platforms, and is placed within institutional systems. Not a bull run based on hype, a repricing of the structure. When there is no more supply, no more demand, clear rules, and live infrastructure, price doesn't need to be told what to do. It changes. People who knew this early on weren't looking at price charts either. They were keeping an eye on rules about child custody, approvals for collateral, legal meanings, and how the balance sheet was treated, due to the fact that those are the real messages. It's not about faith. It has to do with mechanics. And the moving parts are already moving. But that method makes banks put money into accounts ahead of time. It causes money to sit idle in foreign institutions where it doesn't do anything and wastes a lot of time and money. That's how things work now with indirect banking. There needs to be money saved up ahead of time in case it's needed. That money is stuck, not being used and being lost. Everything changes because of XRP. Instead of pre-funding, banks and payment providers can use XRP cash right away. That's it. They no longer need to keep money in foreign countries. They can get to cash whenever they need to. There is a lot of money moving between XRP and the US dollar and XRP and the British pound right now. This money can be used right away to change value in real time. In seconds, value can change around the world. Not for days, not for hours, and not while money is sitting there doing nothing. That's the big step forward. It takes about 3 seconds for XRP trades to settle. In Bitcoin, it can take up to 12 minutes for a single proof. That change isn't just for looks. It is fundamental. XRP was made to be fast, scalable, and large. No, Bitcoin is not. In terms of payments, this means that XRP can grow much faster than Bitcoin ever could. It's this scalability that makes organizations care. They're not looking for ideas. They want things to work quickly. This is even more important. XRP is never seen by the customer. Nothing changes from the user's point of view. They have no idea that XRP was used. They don't need to know. For them, the transaction goes faster, costs less, and the result is better. That's it. This is why adoption is growing slowly and without a lot of fuss. This is the reason why XRP is getting more attention now than ever before, even though it was loud, even with the FUD, even though the crypto markets are unclear. This is a real use case for a real customer with a real problem. In the background, infrastructure is being set up while people argue online about price forecasts and stories. Now get a bigger look at the macro picture. Work won't be able to keep up with prices by 2026. Wages are going to stay low. Buying power will keep going down. Holding paper money won't keep you safe. It won't get better by saving more. Getting an extra job won't fix a system that is based on debt, borrowing, and settling. To get out of this mess, you need to hold investments that can grow faster than inflation. When a financial system is based on collateralization, debt, and swaps, the assets that can handle that stress are the ones that stay alive and do well. Things that can be put on balance sheets. Things that can settle value on a large scale. That's where XRP fits in. XRP is not being set up as a trade. The idea isn't being put forward as a joke. The plan isn't to sell it as a retail speculation tool. It is being marketed as infrastructure. This is not advice about money. And infrastructure doesn't change based on how people feel. It is valuable because it is needed. If you know about collateral and swaps, then everything starts to make sense. That's not possible with an object that has a value of 1.2 quadrillion. It's not possible according to math. It takes too much volume, friction, and danger to deal with low-value assets. Assets with a high value make value movement more efficient. That's why cost is important. That's why it was important to ignore. That's why time was important. That's why rules were important. The tech is all set to go. The tracks are put together. It's finally time for rules to catch up, especially in the US with the Clarity Act. There are institutional systems in place. Everything is coming together. This is why we're not interested in daily candles or weekly charts that show short-term price changes. Our main goal is to figure out what XRP is changing into in the world's banking system. Because prices don't change slowly once equipment is up and running.